Jim Rogers expects worst bear market in my lifetime in coming years as global stocks attempt to recover from their biggest quarterly loss since the global financial crisis. Veteran investor Jim Rogers says there's worse to come. The current rebound in markets may continue for a while following a bout of extreme pessimism, but another rout is imminent, according to the chairman of Rogers Holdings Inc. That's because of a triple whammy of coronavirus, full economic damage, high debt levels, and interest rates that are low, which will hurt when they rise. I expect in the next couple of years we're going to have the worst bear market in my lifetime, Rogers said in a phone interview. Stocks plummeted in the first 3 months of the year as worries about an all but certain recession swept through markets. The global gauge of emerging and developed world equities posted its worst quarter since 2008. Even as governments worldwide pumped trillions to prop up economies and central banks undertook emergency interest rate cuts. This is not the first time he shared such bearish views. Rogers, who co-founded the Quantum Fund with George Soros in the 1970s, had said a bear market was imminent back in 2018. His concerns have grown since, as the debt of businesses afflicted by lockdowns and travel bans comes under the spotlight. The impact of the virus on economies will not be over quickly because there's been a lot of damage. A gigantic amount of debt has been added, he said. Rogers is not surprised by the recent flight to quality, saying it's a tried and true function of markets in distress. There is absolutely no question that throughout history, when you've had bear markets, companies with low debt are the ones that people love the most because they don't have to worry about bankruptcy, he said. He noted companies with a strong market share also tend to emerge relatively unscathed, unless they are highly leveraged. For now, he has a lot of cash in US dollars, some Chinese and Russian stocks, and he is considering investing in Japanese equities. The executive said he's waiting to snap up shares in some of the most beaten down sectors such as tourism, transportation, airlines and agriculture in China and globally. President Donald Trump warned of a painful and tough 2-week stretch ahead as he extended nationwide distancing measures that even if followed closely could still mean more than 100,000 and up to 240,000 Americans died from coronavirus. It was a stark message from a president who spent weeks downplaying the severity of the virus and questioned its potential impact in the United States. Trump did not minimize what has become the gravest public health crisis in decades during his remarks that stretched more than 2 hours on Tuesday. Instead, he advised Americans that darker days are still to come. I want every American to be prepared for the hard days that lie ahead. We're going to go through a very tough 2 weeks, Trump said, setting expectations for a dire fortnight where death rates spike. He was speaking during a White House news conference meant to formally reissue nationwide coronavirus guidelines after Trump faced with dire models showing hundreds of thousands of potential American deaths. Polls indicating support for social distancing and calamitous scenes of New York hospitals determined another 30 days of social distancing were necessary to avert disaster. Markets don't come back in a straight line. After an earthquake there are tremors. That's billionaire trader Stephen A. Cohen waving a cautionary flag to his .72 asset management team, according to an internal memo cited by Reuters on Tuesday. We need to continue to be disciplined, Cohen told his staff, referring to lure of a recovering market after the coronavirus-driven lows. We are seeing plenty of opportunities to generate returns, but I don't want us taking undue risks. Cohen also said his $16 billion firm has effectively managed risk so far this year with performance that is essentially flat despite the gutting market downturn. The note follows a conference call with President Trump last week that, according to Reuters, focused on the U.S. economy and the Federal Reserve. Dan Loeb of Third Point LLC, Stephen Schwartzman of Blackstone Group, Robert Smith of Vista Equity Partners, Paul Tudor Jones of Tudor Investment Corp. And Ken Griffin of Citadel were also reportedly on the call. Cohen pocketed an estimated $1.3 billion last year after his main hedge fund, .72, which is based in Stamford, delivered a 14.9% return. The Dow just booked the worst first quarter in 124 years. Here's how the stock market tends to perform after brutal quarters. The S&P 500 hasn't been down in these 3 successive months since 2008. The market has been punishing for investors, as the market went into a coronavirus-sparked free fall that has the 124-year-old Dow Jones Industrial Average registering its worst quarterly loss since the fourth quarter of 1987. The 3-month skid represented the steepest first-quarter drop from January through the end of March in the index's history, according to Dow Jones market data. The dizzying equity meltdown has amounted to a more than 23.2% quarterly skid for the Dow Industrials DJA, 4.44%, while the S&P 500 SPX, 4.41%, has declined more than 20% over the period, which marks the broad market index's sharpest such decline since the 2008 financial crisis. On top of that, this is the first time in well over a decade that the S&P benchmark has ended each of the first 3 months of a calendar year in negative territory, as it did in January, off 0.2%, February, falling 8.41%, and March, where it's on pace to suffer a loss of at least 13.74%. The S&P 500 hasn't been down in those 3 months successively since 2008. And a January to March stretch of losses has only occurred 7 other times in the history of the 63-year-old stock index. Meanwhile, the Nasdaq Composite Index Comp, 4.40%, has declined more than 14%, which represents the worst quarterly decline since the last 3 months of 2018 for the technology-heavy benchmark. The market's bearish downtrend, despite glimmers of hope for the S&P 500 and Dow over the past several sessions, is underpinned by the spread of the COVID-19, the most severe pandemic in generations. The CEO behind the joint healthcare venture between JP Morgan, Amazon and Berkshire Hathaway is calling for a national shelter-in-place order as deaths from the coronavirus continue to rise in the United States. Our death toll current is now worse than when China was at the same stage, Haven CEO Dr. Atul Gawande said Friday in an interview on CNBC's Squawk Box. We have 12 states with more than 1,500 cases. China had 1 province, said Gawande, also a renowned surgeon, author and speaker. Gawande said health officials are learning from Washington state, where the death toll there appears to be declining. Shelter in place, which some states are doing, he said. We don't have the others on board. We really need a national shelter in place. The United States now has more COVID-19 cases than Italy and China, making the U.S. the largest outbreak in the world. The total number of cases in the U.S. reached 85,996. As of Friday morning, including 1,300 deaths, according to data compiled by Johns Hopkins University. U.S. health officials are working to contain the outbreak. President Donald Trump has imposed bans on travel to much of Europe and Asia. Roughly half the nation is under some sort of quarantine for the foreseeable future. The U.S. outbreak is accelerating, with hotspots in California, Washington State and New York State, which has more than half of the U.S. cases. The White House advised anyone who lives in or travels through New York to self-isolate for 2 weeks and monitor their symptoms if they leave the area. Gawande said that the U.S. must prioritize healthcare workers, some of whom are running out of masks and other needed medical supplies. In Boston, there are more than 100 healthcare workers who have tested positive for the virus after picking it up in the community. A mix of legacy drug makers and small startups have stepped forward with plans to develop vaccines or treatments that target the infection caused by the novel coronavirus. Coronavirus 19, which was first detected in December in China, has sickened more than 750,000 people worldwide and killed at least 45,000. There are no Food and Drug Administration approved vaccines or therapies for the disease, although the regulator on March 29 granted an emergency use authorization to hydroxychloroquine sulfate and chloroquine phosphate to treat coronavirus patients. The emergency rules require patients to receive doses of the drugs donated to the U.S. federal stockpile by drug manufacturers.